This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using for the past several weeks. The most recent trade setup on this pair, as I mentioned a few reports back, was the short trade off this candle with the long wick, placing our stop just above that candle with the long wick, so just above that 88.70 area. And as I mentioned during yesterday's report, we might look to the downside here, and prices did sell off from that price level and from the short trade, again using that as our reference point. So right now, if you're in this trade, I would continue to hold the trade, maintaining a stop just above that 88.70 area. If you want to lock in some profits, possibly, it really depends exactly where you enter the trade, but certainly any move back above the 88 figure would be a bullish sign. So I might move my stop maybe to the 88.20, 88.30 area just to be safe. The next chart is the Aussie Kiwi, and not much has changed here, as I mentioned yesterday. And again, this trade was set up, the initial short trade, off this doji pattern right here. Also this second short trade that I also mentioned a few reports back as well. As I mentioned during yesterday's report, we might look to take profits on the test of the previous resistance line that's now acting as support. So moving forward now, if you do have a smaller position, what I would recommend, the ultimate target for this trade would be the longer term support line, which is right here, this long white line. And let me go ahead and remove these lines here, as they're getting a little bit old right now. And that's where I would look to exit the entirety of the position on a test of this longer term support line, which is right now near the 125 figure. So that could be a target, maybe 125.20, something in that area. The next chart is the Pound Swiss, and this was a trade idea that I mentioned yesterday, shorting off the doji candle. Let me zoom in here, give a better view. And the most important thing is how to take losses. So this is a trade setup that didn't work out. I mentioned how we might look to short the pair, placing our stop just above that 73.85 area, which is the high of this borderline doji candle. I call it borderline only because there was a long wick to the downside, and that did decrease my confidence in the trade idea, but it still was a trade idea. I still had a bearish bias against that high. So what would happen? Let's say you entered maybe around the 73.50 area, placing your stop just above the high of that wick, again near the 73.85 area. Now there are two ways to play it: either maybe about 20 to 30 pips above that area, so maybe the 74 figure, or also you would exit on a close above that level, which is what happened during yesterday's candle, about the 74.40 area. So that's and the most important thing that you can learn in trading is how to take small losses. So in this case, maybe anywhere from 50 to 100 pip loss, and it was worth the risk. And again, I don't really learn anything from my winning trades. It's my losing trades, and these are the trades that you take the loss and you move on for the next trading opportunity. And again, so let's analyze this trade. We were risking 50 to 100 pips, but if the pair did reverse, we're talking about a move back to the longer term support line here, and that's about the 68 figure, so that's about 600 pips. And those are the types of trades that we should look for. Trades where we're risking 50 to 100 pips, but we're looking to make a couple of hundred pips on the upside. So there's nothing wrong with this trade, even though it didn't work out in this particular circumstance. Absolutely nothing wrong with it. And that's the biggest mistake I see new traders make, is that they do all the analysis and then they don't get the feedback, the next minute in terms of when they enter the trade, and they end up, taking losses. It's just part of trading and something that you have to get accustomed to. So moving forward now, flat position. Right now I really wouldn't recommend anything. Possibly, actually, now that I look at it, a possible shorter, actually not short term, a longer term possibility for a double top here. And one of the best things about a double top is the extremely favorable risk to reward ratios they can generate, and also with right now prices right near that top level. And again, that top level is about 74.75. I might have another bearish bias here against that high, 74.75. Prices right now in the 74.40 area. So I do like this short trade, but again, of all the other trades, it would be a little bit low confidence moving forward here. But again, I still, and the reason I like the trade, even if it has a 30-40% chance of working out, is the risk to reward is extremely favorable. We might enter at this point or maybe a little bit higher, risking about 50 pips on the trade, and then again the upside is about 600 pips in reward. So those are the types of trades we should be looking for. Last chart, Euro Swiss, and as I mentioned during the past several reports now, past several weeks, I've been waiting for this trade setup, prices to touch the longer term resistance line. We're right now just beneath that 153 figure, so that's a price level that we should keep our eye on for the rest of this week. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.